Hi, and welcome to the Stockscores Market Minutes for October 3rd, 2014. This week's topic, trend reversal. Seems like a timely topic given that the market threatened the upward trend this week. We'll get into that in just a moment. An upward trend tends to reverse after the upward trend line is broken and then a falling top is formed, followed by a break below the recent low from that falling top. A downward trend line tends to reverse after the downward trend line is broken, then a rising bottom is formed, and then you get a breakthrough resistance at the recent highs. Well, let's take a look at the market back in 2008. This is the S&P 500, and you can see the upward trend line here in green was broken late in 2007. The market attempted to rally back to a new high and failed, and if you'll notice, that's the first time that it failed to make a new high after a pullback. And then we had that second breakdown from the falling top after the downward trend line was broken, and that put the market into the sharp downward correction that we saw through 2008 into 2009. Now in March of 2009, the market broke the downward trend line. You can see that right here. But its first break from a rising bottom actually came a couple of months later when we broke here from the rising bottom. So step one, break of the downward trend line. Step two, our first pullback that created a rising bottom. And then step three, the break through the high from the rising bottom. Now that was on the S&P just a little under 100. And you can see from the chart that we have now that the S&P recently hit 200. So the S&P has doubled since that reversal pattern. Now, what's happening in the S&P this week? Well, we were below the upward trend line this week, not from a falling top. The market made its last high earlier in September, and it threatened, on Wednesday, we were down here, looked like the market was going to break that upward trend line, and my comment to my daily newsletter subscribers was the last sort of card that the bulls have to play is that they can get this weekly chart back above the upward trend line before the close on Friday. Well, that's exactly what happened. On Thursday, we had a good rally. Friday, we held those gains, and we still are holding that upward trend line. So the S&P 500 is still hanging on to that upward trend. I think it's still worth watching for the formation of a falling top in the weeks to come. If we get a falling top and a rollover, we could go down through support. The key thing that the market is going to be focused in on, two things. One is the strength of the US dollar, which to me is a little overbought right now. Not even a little overbought, it's a lot overbought right now and due for a pullback. And then the second factor is earnings of companies, which will start to roll out next week with Alcoa on the 8th of October. So those are the critical things to watch through October, and I think they'll determine whether the market does in fact reverse. Now the small cap sector does have a falling top. You can see that it formed a falling top a few weeks ago from the highs there, and we are threatening the lower support line. Now again, during the week this week, we broke that support, but we came back to hold above it. The small caps are a bit oversold right now, so I think that they will bounce back in the short term. It really becomes a question of whether that cycle of falling tops continues. Now, one thing to remember, when a market breaks an upward trend line, it could just be that it's going into a sideways trading range before the next leg of the upward trend line. And since we still haven't broken through support here from that falling top, that is still a possible outcome. I think it's probably 50-50 right now whether the market can move into the upward trend or break down through support and move into the downward trend. So we want to be pretty cautious with small caps and keep a close eye on them. The TSX broke its upward trend line 2 weeks ago. I talked about that 2 weeks ago in this video. And we are now seeing that pullback. But keep in mind that this pullback is not from a falling top. It is from a new high. So the question now becomes, does the market rally back and maybe only get to, let's say, 2250 on the T.XIU and then fall down and break down below support at 21? That would be a reversal. For now, it's simply the start of a consolidation phase after some really strong gains over the past year. Now, strength in the US dollar is really what's hurting the Canadian market, because so many Canadian stocks are based in the commodity space. Commodities are what dominate the TSX Venture, and you can see the sharp downward move over the last 5 weeks in the TSX Venture. We're now nearing support. That coincides with the US dollar hitting resistance. I'll show you that in just a moment. And so the TSX Venture looks pretty ugly. It is at support, so it should, bounce here, but I think a lot of that will depend on what happens with the US dollar. Treasuries broke their downward trend line earlier this year, just before early part of the summer, and they have been sort of building along this upward trend line, have held it thus far. What I want to watch for is whether treasuries form a falling top here, roll over and retest this upward trend line. If that happens, that means we are looking toward rising interest rates in the US and falling bond prices. So for now, remain bullish on the treasuries, which means interest rates should remain low. But certainly if we form a falling top here, then we have to be a little bit cautious about the treasury or the bond market reversing and heading lower and interest rates going up. All right, here's the chart of the US dollar, which I think is probably the most influential chart of the week, because look at the gains over the last 3 months. That has been quite astronomical, and that really has hurt all commodity prices, hurt a lot of the global markets. We're getting deflation because of it, which in some instances is nice. I mean, if you pay less for oil, that's good for the economy, but at the same time, deflation is something that the central banks really don't want. So they're going to want to keep interest rates low to stimulate economic activity and sort of drive some inflation up, which is important in the economy. The US dollar is likely going to get stuck here because it is at those highs from 2012, but it's really showing no signs of getting stuck. And so although when markets rally into resistance like this one has, we tend to see them stall. Until we start to see that sign of a stall, I don't want to get too overzealous with that outlook. The US dollar has gone parabolic. Another reason why it should pull back. There's all kinds of reasons why the US dollar should pull back, but on the other hand, you would never really expect the US dollar to show the kind of strength that it has shown over the past few months. So this one's real critical for gold, silver, all the commodities, and it's something to keep a very close eye on next week. Gold, there's the problem with gold. It has been falling with the US dollar rising, certainly not falling as quickly as the US dollar is rising, but that's a very bearish pattern. We've got falling tops, testing support. Yeah, short term it might bounce because it is at support from the lows of 2013, early in 2014. So it should hold here, but there's certainly the odds are against it with that pessimism in that chart. I wouldn't be surprised if we see the US dollar pull back, the gold kind of bounce up into here, roll over, and ultimately move lower because the pattern on gold is certainly pessimistic. Now, oil has been holding that upward trend line for the previous 3 weeks. You can see how it was bouncing along the upward trend line. Well, this week it broke down through that upward trend line. That's a bearish signal. It implies that oil is now going to move down to this next line of horizontal resistance, maybe ultimately finding support on the OIL ETF around $19. So my outlook for oil bearish based on what happened this week. Volatility and the fear factor in the market was on the rise for the last couple of months. This week it really broke down, and that implies that some of the fear about the big market correction happening is going away, and that supports the idea that the US stock markets anyway will hold that support line and try to make new highs. So this is a bullish sign for the market, but certainly we want to keep an eye on the VIX because it can reverse very quickly. All right, so my outlook, bullish on US stocks, but I'm putting a neutral rating in the short term just because we're dancing along that trend line. I want to be a little bit cautious. Canadian stocks, I've lowered my long-term rating to neutral because of the break of the upward trend line. Short-term bearish, but I have a feeling that we're going to see that turn soon, particularly if the US dollar does get stuck at resistance. On gold and oil, bearish on both time frames. US equities hold on to support barely and remain bullish long-term, but short-term caution is warranted. Canada is suffering from the strong US dollar and pulling back, but should try for stability soon. US dollar strength is hurting commodities. Oil has broken support, and gold is threatening the next level of support. Well, that has been the Stockscores Market Minutes for October 3rd, 2014. Have a great week in the market and trade well.